What's up, guys? Welcome to the Momentum Trading Lab. Please remember to hit that like and subscribe, and let's get into it. All right, guys. So we have the FOMC rates coming out tomorrow at the 2 p.m. New York time. So the market might be a little choppy from now up until 2 p.m. tomorrow. So we'll have a look. We can see on the Nasdaq, we had that initial dump from the open, and then we've kind of just been chopping around. So I'm wondering if we will see kind of the same during the afternoon session and the morning session tomorrow. Let's start the analysis on the dollar index. Okay, so this line was kind of the projection from yesterday. So we had the initial fair value gap on the 4 hour that we refined to this gray box on the 1 hour. And you can see it came right into it. It looks like it came towards this order block. And then also we had these relative equal lows. So this would have been the retail support. So under the retail support is where they would put their stop losses for their long positions. And as we can see, the market makers came to knock them out. And then they basically did the same right here. Let's copy this line. Right, so this triple bottom formation, this is kind of to induce traders to go long and put their stop losses below these lows. And then you can see they came directly for it into that imbalance and then started to move to the upside. So it's breaking into a bullish market structure on the 15-minute. So, well, not really, there's no technical high. Let's see on the 5-minute. So on the 5-minute, it has flipped from a bearish market structure. So a series of lower lows and lower highs. And then with this little leg to the upside, we had the market structure shift on the 5-minute. And this will most likely propagate through to the 15-minute as well. So a high is defined whenever you have a candle with a high and then a lower high on either side of the candle, like we have right there. So it's moving above, but it's not currently displacing above. So this might just be knocking out some shorts, taking out some of the buy side liquidity before retracing a little bit. There is this fair value gap right here. This one, which starts at 104.865, and the upper end of the gap is at 104.945. And also if we pull our Fibonacci on this, so just from this low to the high, you can see on the 15-minute, the momentum master is also getting extended. This has been pinned to the top. MACD, Andy Williams is starting to get extended as well. And then we have a little bit of a curvature to the downside on the RSI. No divergence yet. Let's see if there's a divergence on the 5-minute. So we can see there's a bearish divergence starting to print on the 5-minute at the key level, which is at the buy side liquidity above these relative equal highs. The momentum is pushing to the downside. Make it a little thicker. So that's your regular bearish divergence, which is an indication that this little uptrend is coming to an end. And then you can also see the bearish divergence on the Williams. So you have a high and a lower high. And on price action, you have a high and a higher high. So that is a regular bearish divergence, which is normally an indication that the trend is about to reverse. And over here, we had a little bit of an uptrend. And with these divergences, we can also see it on the MACD. So with these divergences, it's indicating that we could see a short-term retrace for the dollar into the imbalance right here. And these lows also induce traders to go long. So we have a bit of liquidity and the imbalance right there, and then we have the imbalance right in between the Fibonacci 618 and the 786. So it looks like we could just get a short-term retrace to reprice and then move back to the upside. Okay, I kind of skipped the daily. Quickly go to the daily. Okay, so the daily has just been putting in higher highs and higher lows with the occasional sweep of the sell side liquidity before moving higher. Earlier or during last week, we projected the move into this gap which we did not get. We bounced into this one, moved towards the buy side liquidity again, and then like we mentioned yesterday, it looks like the dollar index is reaching for these highs at 105.886. Starting to lose a little bit of momentum. You can see there's a bit of a bearish divergence starting to print. But I still think it's going to reach for that high. So look at the 4 hour. Okay, so the 4 hour is resetting nicely. It's bouncing out of that bullish fair value gap on the 1 hour. And I think that was basically a OTE bounce. So it came right to that 706 almost exactly. Just touched into it, then started to move away. So that kind of tells me that it is definitely wanting to reach for this high and that high on the daily chart as well. Still battling with this volume imbalance. So between those two candles. Alright, just pushed through it, then came back. Okay, so the 4 hour wants to make a push towards the buy side liquidity, it seems. Let's see what the 1 hour is doing. Okay, so we have some, we have a liquidity pool right there. Just gonna remove the lines for the volume imbalance. We know that it's there. Okay, so more liquidity. Okay, so this was the very last lower high. So the dollar kind of needs to displace above this high. It could turn around right here at this imbalance. But the liquidity is right there. So it might just consolidate in this area for a bit. Could retrace from for this little leg to the upside back into a discount before continuing to the upside. Retrace back into discount and then go for the liquidity above the highs. Okay, let's have a look. It still has room to push to the upside. There's still room left. There's still room left on the MACD and on the strength as well. A little bit of a bearish divergence starting to print. So you have a, just make sure of that. Yes, so right over there you have a high and a lower high. And this is faint. So there you have a high and a higher high. So this kind of tells us that it wants to come back into a discount for this little leg to the upside before proceeding to the buy side liquidity. Okay, so overall, It looks like the dollar wants to push to the upside after maybe a little bit of a retrace on the 1 hour. So the dollar index still definitely looks bullish. All right, so that's the dollar index. So overall dollar index still looks bullish. Nice little flag as well. So let's have a look at the dollar index, or not the dollar, the Nasdaq. Okay, let's have a look at the daily chart. Because it came towards this little imbalance that I pointed out on one of the streams. One right there. Let's also get a Fibonacci on the impulse to the upside. So came right into the golden pocket area, and it looks like it is starting to move away. There's a bit of a imbalance that it could go up and reclaim on the daily. Remove this. Okay, so it came back into this one. So it still hasn't closed below this. Just kind of wicked through it into the volume imbalance, into the Fibonacci golden pocket. So now that we took the previous day low, okay, this was the previous day high. Okay, so above the previous day high, we have unclaimed buy side liquidity. We already took the sell side liquidity below the previous day low. Okay, into the volume imbalance of the Fibonacci golden pocket. We could see a little bit of a move back to the upside for the Nasdaq, but the dollar is still looking bullish, so we just have to be aware. But we also said that it looks like the 1 hour wants to retrace. It's got that bearish divergence, and it's in this fair value gap, just struggling right there. It could, like we said, retrace into the discount and then push back to the upside. And then also considering that we took the previous day low and we came back into a discount on the daily chart, it seems like we could get a small little push back to the upside towards potentially the high of today or the previous day high, where the buy side liquidity will reside. And then we also have this fair value gap on the daily chart, so this could act as a bit of a magnet for price action. Okay, so previous day high, previous day low, this has already been claimed. I'm gonna remove that. And then right here, make this a little lighter. Could be your bearish order block on the daily, so I'll keep an eye on that level. So this is the start, and then the mean threshold will be somewhere in that area. So it's the consecutive candles before the move down that creates a fair value gap. So that is your bearish order block. Momentum is kind of starting to reset. The Williams still has some room to go. The money flow has some room to reset below the RSI again. So this might just be a small little move. Let's see what the 4 hour looks like. So this is definitely displacement below the previous low, which is a bearish indication. Let's see, we still have this low untouched right here, but I'm kind of sketched out. If you go to the continuous chart, we are still far away from the low. I'm not sure what to make of this gap on the continuous chart that we don't have on the December contract chart. So that is just maybe that's something that sketches me out, that this low is still untouched right there. So the 4 hour definitely looks like it wants to make a push to the upside. We had these relative equal lows, so we came for this sell side. Go to the 1 hour. 1 hour also wants to make a push. Switch on the regular trading hours. So we have this opening range gap. That is from the close to the open on this one. And then we also still have this one right there that's also unclaimed. Okay, I'm just gonna move this to the side. There's just too much going on the chart right now. Just gonna move everything to the side. So if you're holding shift, then you can move things on the same axis. So see, I'm moving up and down, but it's just staying on the same axis. You just hold in shift on your keyboard. Just move it to the side. Okay, so those are the opening range gaps. Then we have these imbalances right here with the relative equal highs. So there's a bit of an indication for a little push to the upside. So it looks like it's potentially drawing to all of these imbalances. So we have these two fair value gaps, the opening range gap, and then we have relative equal highs. Okay, so your relative equal highs, another imbalance right there. Would have made me feel better if it took this low as well. Then I would have definitely looked for a nice scalp in the afternoon session. Okay, let's have a look at the 15. Okay, so this was the open right here. Okay, so the open just created a bit of an imbalance right there. Price action came into it, then started to dump. Now it is starting to move above the most recent lower high. So it is starting to shift market structure on the 15 minute with an imbalance. So this is not confirmed yet. The candle still has 15 minutes to go. But there's an imbalance starting to print. So this is the most recent high. So it's kind of starting to do a bullish market structure shift. We just need the displacement on the 5 minute. Let's refine it down to the 5 minute. Okay, so we did take a low, then started to move away. Just want to see where it is in relation with this high. Okay, so just right now starting to dig into this small pool of buy side liquidity. Okay, that's 5 minute wants to reset. Everything is overextended. It's starting to dig into this little pool of buy side liquidity. So it's likely it comes back into one of these fair value gaps. We have this one right here, and then there's another one right there. Another little imbalance right there. I'm just gonna hide these gaps. Okay, so just taking out that high. Market structure shift on the 15-minute. So it looks like there's a potential for this afternoon to, which one is it? This one. Potentially go, move back into that opening range gap. So potential entry from this imbalance. The start of the gap is about 65 points. It'll stop right at that low. There's a potential idea for the afternoon. So what you can do is you can wait for this to retrace into the one of these boxes. So this will obviously to get there, it needs to go into a bearish market structure, and then you just wait for the displacement to the upside that takes out the previous high. So you want to see a little fair value gap on the 1 minute or on the 2 minutes. So I like to use the 1 and the 2 minute, and then enter on the retrace. And then the first target will definitely be above these highs. Take a partial right there, and then I'll definitely take the next partial at the gap. We also have the 618 extension, so this might still change as we go up. If we go up a little bit, then it will just kind of dig into it, and then there might be a little target as well. That was the high of the morning session. This was at 20 to 10 this morning. So that will be your, I would say, your ultimate target, 15,373. Then the next one right at the start of the opening range gap, 15,355. And then whatever this high is going to be right here, that will be your first one, where I would sell the majority. So let's say you go in with 4 contracts, sell one right there, stop the entry, sell the next one there, and the next one right there. Starting to get nice displacement to the upside above the previous day high. Just have to be aware of this little, this could act as resistance, but this might just be the temporary high for the retrace into this area before we continue to the upside. Alrighty, so what's it now? Okay, so the afternoon session has just started 10 minutes ago. The afternoon kill zone starts in 20 minutes. So that's ultimately when you kind of expect the setup will form for your entry model. Starting to push. I will just keep track of these imbalances on the 5 minute, and then once we retrace, go to the 1 minute and look for the flip in market structure, the flip to bullish market structure, and then you can enter on a fair value gap in discount. Yeah, or maybe it's going to move to that imbalance right there and then make a bit of a retracement for a potential entry. Still would have felt so much better about the move if we took out this low, but it's kind of unsure with the contract rollover. If you go to the NQ chart, then there's some craziness right there around the contract changeover. And then also FOMC tomorrow. So whatever I trade this afternoon is going to be with less contracts than normal. And I haven't taken any trades yet today. I was running around for my agricultural AI thing that I'm doing. I'll quickly show you guys just before I sign off. So in South Africa, we are just starting. So this is a artificial intelligence system that grows grapes and stuff for industrial farming. So in South Africa, the table grape season is just starting now. So a lot of the guys are calling me every day and wanting to get the stuff up and running. So that's what's basically the two things that I do during the day is this and the IntelliFarm AI agricultural thing. All right, so it looks like it is just wicked through the fair value gap. It looks like that could be the short-term high before the little retrace. Just want to get my Fibonacci back on the screen. Okay, so that's kind of what I see. So I'm gonna see if the short scalp is gonna be worth it back into a discount. Because you can take the risky short scalp, but you just have to consider that the order flow on the 15-minute is definitely bullish. We displaced above a high. We have the fair value gap that looks like it's going to be confirmed in 55 seconds. CNC says you should look at Greenart CBD. They have drone setups for farming. They might be able to develop something. Sweet man, thank you. I'll definitely make a note of that. Greenart CBD. Definitely gonna make a note of that. Let's see, so we are still in the imbalance on the 15-minute. Alright, but we are flipping into bullish market structure on the 15, so I think we are going to see the retrace on the 5-minute towards one of the imbalances, and then potentially make that push towards the opening range gap, and then you can look for a potential entry on a fair value gap from 10 o'clock. So kind of not 10 o'clock, 2 o'clock is the PM session silver bullet. So you just want to see like if you think we are moving to the upside, then you just want to see us take out a low on the 1 minute, just kind of knock it out, and then displace to the upside, and then you enter on the first fair value gap, and then you just do the opposite for a short. So if it knocks out a short-term high, for instance on the 1 minute, and then displaces to the downside with a bearish fair value gap, then you enter that, and then you just run it to the first opposing liquidity pool. Alrighty, let's have a quick look at Bitcoin, and then I'm gonna be signing off. Alright, so this was the little projection from yesterday. So the initial projection from, I think from Sunday, was that we come up, we take out the relative equal highs, take out that liquidity, reprice the imbalance, and then retrace towards the sell side liquidity, which did not happen. So we displaced above these highs. So then we kind of had to flip from a bearish move to a more bullish move. So it created this nice fair value gap, retraced into it, never really closed above it, and now it took out the first buy side liquidity pool, and it looks like it's going to reach for these highs right here. So we have the liquidity at 27,580 more or less, and then the next pool is 28,142. So it looks like it is moving towards these liquidity pools, and then right at this liquidity pool, so the buy side above this high, we also have this imbalance right here. So it looks like this is kind of the draw on liquidity for Bitcoin at the moment. Alrighty, I think that's it for my analysis today. I'll be back tomorrow, and thank you guys for tuning in today. Definitely jump into the Discord if you're not there yet, to keep up to date with my updates during the day. And then I will see you guys in the Discord. Thank you guys very much for watching.